Hello, everyone. I'm Suling Yip. I'm one of the partners in the KPMG Forensic and Financial Crimes practice, where I've had the opportunity to work predominantly in my 30-ish years career, predominantly with financial institutions, but more recently got involved a lot more with the fintechs, the digital assets, and more recently the financing and leasing and the lending industry. So really exciting panel with the CEO of Coho. A lot of things resonated in terms of talking about regulation. So I'm going to dive right in because we only have 30 minutes and there's lots of juicy stuff to talk about. So what I'm going to do is I'm going to ask each panelist a first question, but I'll ask you to introduce yourself first and then get into your response. So Amit, you're next to me, so I'm going to start with you first. So Amit, can you talk a little bit about, obviously, there's been a lot of rapid evolution of the different types of frauds, the different type of threats that financial institutions are faced, especially with the increased sophistication of organized crime. Obviously, technology, fraud has really become borderless. So, and of course, I have to ask you a little bit about like how RBC is using AI as part of its toolkit. And we understand, and I agree with what Daniel said earlier, it's not a silver bullet, but can you talk a little bit about the evolution of fraud and how RBC has been able to, use AI as part of its toolkit?
Thanks, Sweeling, for this question, and thanks for having me here today. My name is Amit Sadhu. I lead the credit and fraud management teams for RBC, and before that I've managed unsecured lending business and newcomer businesses at RBC. I've run our credit products from a credit risk management point of view, so I've had multiple roles at RBC, and before that I worked at American Express, Capital One, so I've been in banking for almost 25 years. So the business of fraud, unfortunately, is growing. Now, the nature of fraud has also evolved, as most of you know. So back, there was a time when, fraud management, people think of it would be the fraudsters are people who are sitting in their hoodies in their basement committing fraud. Those days are long gone. Fraud is now committed by very skilled actors, nation states. Think North Korea. It's a big source of foreign currency for them. Think Russia, right? So think organized crime. So these are the kind of people who are committing fraud. And with this evolution of the type of people committing fraud, what's also happening is the nature of technology that's available to them. North Korea, organized crime, they have access to all the quantum computing, all the AI, Gen AI, anything that you can think of, they have available to them. And what we do need to then do on the bank side is fight fire with fire. So we then also need to use the same AI models to be able to combat fraud, and that is what we are actively doing at RBC. It's an evolution. We are well on that journey. I can also speak to, not to go too deep into other banks, given that Dan is here, but I can say that most banks have started using these kind of tools. We at RBC have been using it for the last few years, but we are also upgrading our entire set of tools. And it's not about building models. Building models is the easy part, but how do we deploy them real time into fraud kind of situations? It doesn't help if we, for example, for auto finance, some of the friends were talking earlier today. It doesn't help if some of those models are deployed after the fact, by the time the car is out of the dealership, and good luck trying to find it. So how do we build more real-time models and these sophisticated models? How do we make sure that we have access to as much data as we can that these models are trained on? That's what we continue to actively work on. So very long answer to a short question, but I did want to set the context there.
Can I ask maybe a follow-on question? Can you talk a little bit about the balance between preventive? Because, again, I've had, unfortunately, been involved with some very, very large fraud investigations with a lot of my banking and financial institution partner. Can you talk a little bit about the importance of, again, balancing both preventive and detective in terms of fraud or any types of financial crime, right? Whether it be money laundering or first-party fraud.
Yeah, no, it's a great question, and sorry to hear about your experience. But we do set within fraud management, like from a point of view of controls, we have a layered set of controls. So we have preventative controls, which is before the transaction, the fraud transaction actually happens. There's detection-based controls, which happen when the transaction is happening. And then we call as remediation. Even after the transaction has happened, we have certain controls that we can deploy depending upon the nature of the transaction to be able to get our money back. So that's how we deploy our set of controls. What we do see is that preventative controls have the least client impact. Right, detection is somewhere in the middle, and remediation, yes, you're remediating it, but by the time the client has already gone through a lot of pain in the whole experience process. So it all depends upon it takes much more investments to be able to develop the right preventative controls, but the client experience is the best in those controls. So yes, all the banks have deployed technology like multi-factor authentication. Think even something as simple as chip and pin back in the day. These are examples of preventative controls. A lot of our AI is deployed at the time of detection, and you can argue that prevention is always better than cure. But having said that, if you do miss something at the prevention stage, detection is the next best place to tackle it, and that's where a lot of these AI models today are deployed.
Awesome. So that's perfect segue for my next question to you, Daniel. So I know you work on the front line. So can you talk about the importance of having an ecosystem of accountability and managing fraud, not just in the front line, but really across all the different business units, and how you work with your different counterparties at CIBC? You're in lending, but how do you work with your customer service and all the other business units to, again, tackle this problem from multiple facets?
Yeah, thanks, and hi, everyone. So maybe just to introduce myself, I'm Daniel Rattazzi. I lead the personal lending product teams at CIBC. So I'm responsible for our mortgage business, our unsecured lending business, and also our auto finance business. So we would have a counterpart on the risk side, obviously, that is much deeper on all the technical aspects of things, but maybe how I think about it from a business perspective. And there was actually a session before this one that was auto lending specific, and we talked a bit about the ecosystem. But that conversation on the ecosystem was more centered on the banks working together. What I think a lot about is how the partners in our ecosystem to deliver our products and services can be more accountable. One of the things that often feels like as the product head or as the business leader is that the burden or ultimately the cost for fraud sits with us. And so whether it's proactive or reactive, we're often in the driver's seat for pushing enhancements out into our ecosystem partners. And they're very cooperative and they'll participate, but it would be better if we could create stronger accountabilities end to end. So just to give an example back to auto lending, we work with dealers. Dealers have the accountability for hiring the right people. They have F&I managers that are responsible for doing diligence on the clients. They're responsible for their training. They're responsible for all those activities. We have dealer portals that see deals come in from individual dealerships. They know who the individuals are that are sending them in. They should be aware of who the principal ownerships are of those dealers. And we have a number of partners. We're fortunate that the partners that we work with for our underwriting and our sales support are really, really strong on this. But in general, I would say advancements in fraud detection and ultimately elimination will move faster when there's real accountability end to end in that ecosystem. And so for those of you that are involved in fintechs or your partners to lenders or to banks in any of the businesses, the more you can be proactive at raising these opportunities and demonstrating your commitment to the part you play in fraud detection and fraud elimination, you have a unique vantage point. You see an element of that process that puts you in the best position to address that issue. As lenders, that's what we value. I would say we're at the point now where, we talked about it, fraudsters are getting more sophisticated, the banks were getting more sophisticated. The cost of fraud from a pure dollars of losses isn't really the issue right now. Like, that's largely under control. It's more the investments that we're making to maintain that loss rate or that level of fraud. And that's, it's necessary, but it consumes capital, it consumes resources, it consumes attention. And when you have an issue, when you have an incident, whether it's a fraud ring or a cyber incident or whatever it is, it disrupts the entire flow of your business, and all resources then get redirected to solving that problem. So, I think the ecosystem among banks is important. It's crazy to me that we don't spend more time solving for this, and we hide behind issues like privacy or whatever it is. But we gotta bust through that. But I would just say, any big lender, any big bank lender has partners that they work with to deliver their products to market. We need those partners to be more proactive.
Actually, I can agree more. I have to insert, I used to run a financial intelligence unit for one of the big 5 banks, and one of the biggest issues that we face is that when the detection happened and when my team would get the investigation, either the fraud had already happened or we get a production order from law enforcement and we're trying to conduct our investigation to help law enforcement help the customer that was a victim, oftentimes the information that we had access to either wasn't available, and again, it really came down to lack of training. I don't think it was a lack of desire, because I think the people in the frontline business, they wanted to do a good job, they're doing their best. But I think it was just a lack of either system or process or education, where we just didn't have the information that we needed to conduct our investigation. So definitely, and since we're talking about partners, Bill, next question is for you. So you obviously work with a broad range of different industry players and different markets. Can you give us your perspective on, again, that need, that, to keep on what Daniel's saying, about cross-collaboration, partnerships, and maybe share some of the trends you've seen also in other markets in your business?
So one of the things with fraud is they're patient. A fraudster is patient. This isn't about, I'm going to do something spur. And so, a lot of that is, how do I get signals as early as possible? And that's why cross-industry collaboration, and Daniel talked about it, like the fact that I'm at a dealership, I'm not first point of contact, and Mike mentioned it earlier. Often the lender of a car loan, they don't know who the bank is. They think of the dealer, and so you don't have a connection. So there's all of these points where you can start to create and leave information. And so the importance of the sort of cross-industry is that, how early can I get in that process? And there's examples in globally. I know Meta, for example, was doing a pilot with NatWest in the UK, where they would sell them leads. They would do the leads. They'd come back and say, hey, we found these 5 ended up being fraud. They would go back and they would update the profile in Meta. So you started to see, even as early as sort of social media setup and profiling, you're starting to see more collaboration, because I think there's signals start to happen. We have a large fraud consortium. Many of you are part of that today. And part of the value is, it's not loans, it's not credit cards, it's deposit accounts, it's governments helping us. And so, if someone's opening a deposit account, it's a great opportunity to create sort of synthetic fake ID, because a lot less scanning, a lot less checking going on there. And so getting the signals from the deposit account when I'm now opening a car loan, credit card, so you start to see the value of those signals getting accumulated together earlier in the process. And you're not going to do that if you stick to your one lane. And that's where we're seeing, we do think that big tech is a player here that's probably not been as engaged as they should be. We're seeing ecosystem people, so DealerTrack is a great example, where they're going to start to offer IDV. We've seen it in the mortgage industry, so FinTrack came out. They've now got mortgage brokers have to go through a KYC process, again, because they're earlier in the into the ecosystem, into the process. The challenge for that, though, is that, again, they're meeting the bare minimum. So how do you help them ensure that they are getting the right information, the right signals at the right time, because that's going to then flow downstream. We know synthetic ID is a problem. We know it's been rising. So again, the earlier you can catch this information and sort of aggregate that, the earlier we can detect it. Otherwise, once it's into the system, it's really hard, like at least a credit bureau, it's really hard to pick out that one's not real. I mean, they've done a great job, but it's that patience. And so what we are seeing globally, there's a couple of things. Some markets where UK in particular is really struggling with scams. There's a huge issue in the UK, but they're also having a real challenge collaborating. So I was at a couple of sessions last year in the UK, and everyone said the same thing. If we would just share information, but we can't. It's like, why can't you? Daniel hit it. Like, it's not a privacy thing. There's almost every country has an exception for fraud purposes, and so sharing's not great there. But you're starting to see somewhere Australia is one that's leading the market. So they've got a really good scam organization that they've created. They've got their digital ID. And so the challenge is, you're going to see more and more of the sort of scam organizations coming up. We've got it here in Canada with the CBA, with the Anti-Scam Coalition. And so you're starting to see that rise up. Digital ID is going to be an interesting one. So a number of countries, Sweden, for example, has done really well. Estonia is sort of the benchmark for that. Australia launched theirs since early on. But now you've seen the UK, a massive backlash, because they've positioned the digital ID in the wrong way about, we're going to sort of catch more illegal immigrants. Well, it's not selling them value. So, how do you make sure? So those are some of the things we're seeing is this idea of really focusing on the scam, particularly in markets with real-time payments, that's sort of creating much more collaboration within the industry because they realized that you got to do that to get those signals sooner.
And I think with real-time payment, that preventative controls is so much. Again, I've seen it time and time again. When that money's gone, it's gone.
Well,
You're not getting it back.
The
right?
most interesting thing with real-time payments in the UK, for example, is they've actually now extended it to 3 days. Right? So real-time is actually not real-time anymore because if you have any sense that this might be a bad transaction, so instead of bringing in and doing things earlier, I know we've been talking to a lot of people in the industry around sort of collecting that. So if a bank A closes an account for fraud, like notify all the other banks. Like even in scam detect, that would be great. That would be better than doing that than saying, oh, real-time payments will just slow down the payments because then it's not
And
real-time
you've got
payments.
the sanction evasion issues. I think we're a little bit behind, but hopefully, I'm encouraged by the fact that with the PCMA, the Proceeds of Crime Act amendment, with the public-private partnership information sharing, I'll be really interested to see what that looks like. But now I'm going to turn it back to you, Amit. I'm going to ask you a bit of a question on a hot and heavily debated topic. Whenever I go to these financial crimes conference, this is very, very heavily debated. But can you talk a little bit about, I guess, to the point that I was making, like Canada's, I think we're trying to catch up with the rest of the world. We're a little bit behind, but there's a few new amendments that are giving me a little bit of hope. But can you talk about what is it that you think we need to do, sort of like as an industry, as a country, to be successful in the fight against fraud? But also, I'd be interested to know how RBC is collaborating, like between the fraud and the other teams, like the AML teams, because again, this is a trend that I'm seeing a lot more. Fraud has now come under, and it's really starting to meddle with the money laundering piece of it, right? And FINTRAC's guidance is now that they want financial institution to report suspicious transaction report on fraud, which is as a predicate offense versus just the actual action of. So again, heavily debated. I'm here to tell you that that's not going to change. But can you tell me a little bit about like how is RBC working with all of its partners in both the fraud and the AML teams, and how are you collaborating together again to just be stronger as a line of defense?
So I'll give a three-part answer here, like how we are working within RBC, then how we are working with other banks, and then how we are working across the sectors, the telecoms, big tech, and so on and so forth, right? But before we get there, I do want to take the point that Daniel made that it's not the fraud loss side which is painful. It is also the amount of money that the clients lose, and that destroys their trust in all the other elements of society. The guy who's lost $50,000 trusting that the person calling on the phone is calling from CRA, etc. Clearly, they lose a lot of trust in the whole system. And by the way, a lot of the money that the fraud actors or the scamsters they make, it funds other illicit activities, right? It elicits gun trafficking, human trafficking. In fact, one of the reasons I'm motivated to come in every day and try to fight this whole battle is not because it saves some, a few $million for RBC. It's important to save that money, but more important it is to solve for the societal evils. That's very, very critical. So coming back to the three type of collaborations that we focus on. So yes, within RBC we have a very, very good structure. And before going to AML, we work very, very closely with our business partners. So, we try to make sure that we have processes in place so that best practices across platforms are shared. If you're a demon in insurance, it's not going to become an angel on the personal banking side, right? So we want to make sure that kind of best information gets shared even within the different businesses within RBC, which sometimes I agree with Daniel. There are lots of these requirements that prohibit us from doing that, or at least there's a perception they prohibit us, and sometimes we just have to challenge them and push the envelope there. Similarly, with the AML team, it's a very close partnership. We are beginning to make sure that we use each other's data. It's not AML data, it's not cyber data, it's not fraud data, and it's sometimes they reside in different systems, different platforms. So how do we migrate some of our models to a single platform so that we are not fragmented? We are working together in this. Becomes it's easier said than done, but we are working towards it. There's good progress happening in that space. Across banks, again, like within Canada, we're lucky. We're just across the street. My partner in crime, Ben Mellett at CIBC, and I call him almost every other day. We have very, very good cooperation, at least at a more senior level, and we're trying to make sure that we break those barriers down. And we don't look at, we compete, and I'm sure in Daniel's business, we compete for market share. We're not competing in that space, in the fraud space at all. We're trying to help each other out. We don't even look at, how we're performing relatively, only because sometimes it creates perverse incentives. So there's very, very good, cooperation, partnership there. Where we do need to do some more work and where we have gotten started is cross-sector. So a lot of fraud, a lot of scams, they don't originate in the banks. In fact, banks are the space where they get monetized, but a lot of these scams, they originate in telecom channels. I'm sure all of you guys get a lot of calls, SMSs, emails, or increasingly social media, right? Like I've seen on Facebook, Elon Musk selling me a crypto scheme, and I've taken up with the Facebook people, if Elon Musk does want to sell this thing, he'll sell it on Twitter. He's not going to sell it on Facebook, right? So there's a lot more that we need to do on a cross-sector basis. And the good thing is we have created the Canadian Anti-Scam Coalition. So this is a coalition that we have formed with all the banks, telecoms, Equifax, TransUnion, a whole bunch of other partners in this space. And we are bringing in big tech into it as well. And what we're trying to do is then work together to create those cross-sector solutions. How do we make sure there is more data sharing across sectors? How do we make sure that we also educate consumers? This is, again, not a space and we are competing. So how do we all come together and educate consumers about telling what's going on in this space, making sure that they're forewarned even before the scams start, or create more in-path messaging as we get into breaking the so-called spell under the consumers are when they're attacked by scammers. So that is a lot of work happening in this space. We're getting started, moving in the right direction, but we do need to deal with a lot of regulatory challenges. It's not just the regulations on the banking side. We're dealing with regulations on the telecom side. We're dealing with regulations on the big tech side, and that's what we are trying to solve for as well.
Very good answer. Daniel, I'm going to turn to you again from your client-facing role, and we talk a lot about the disruption and the opportunity for fintechs and new types of financial institution. And I know the big, obviously the larger banks are wanting to make sure they retain some of their market share, but again, obviously there's the balance you need to fight fraud. So can you speak to the challenges that are associated with sort of striking the right balance between preventing fraud, but also speed to service and speed to value? Obviously improving fraud detection capabilities, but also making your products available to clients. It shouldn't take 10 days to get something approved if a fintech could get it approved in one day. So
so on that one, I don't worry so much about clients choosing speed over being protected. I actually think clients value the protection that the banks are providing, and we launched IDV to our independent dealer network. I haven't heard any noise from clients or from dealers saying this was a bad idea. So I think clients value that. I don't think clients are looking for solutions that in any way circumvent or make things faster. Having said that, I do worry about the overall client experience. We talked about it in the previous panel around, we don't want to create friction for everybody. We want to create friction for some people, and the right people. I actually don't even agree with that. I think you want to create a certain amount of friction for everybody. I actually think that in many ways consumers value knowing that they're being protected. And I don't mean friction in the negative sense of the word, but consumers want to know that you're taking the steps to make sure that they're protected, and that those are steps. Those could require activities. So what's happened, unfortunately, is we just keep piling things on. We've layered on a bunch of additional processes, additional checks, additional steps. Sometimes we find fraud on an auto loan after the vehicle's already left the lot. Sometimes we find fraud for shelter on a mortgage application after the client's already in their home. And so it's how do you bring these things forward, and how do you create an end-to-end process that actually embeds the right amount of oversight and detection into a client-centric flow? And so that's where we really are focused. And it does require some re-engineering. The reality is that in the future, things will be different than how they are today. We have AI fighting AI. We have, AI being used to create fraud, AI being used to detect fraud, and the two are fighting with each other. How does that then redefine what the end-to-end process looks like for a client trying to get a mortgage, get a loan, or get a car loan. We're doing some of that re-engineering right now, and it's really important. And I think clients value it, and they want to know they're protected, but the process will change.
So, Bill, I'm going to ask you to sort of close on sharing, what you believe the role of AI will be in the next few years, and how we can, I guess, harness those opportunities. Daniel talked about fighting AI with AI, and what's the opportunities for professionals and service providers alike, again, to use AI as a tool.
So there's a lot of dynamics happening in the market, and so we often get hung up on the, someone stole a voice or the video of, Elon Musk on a thing, but some of this is low tech, right? But our technology, I've always said, if you want to understand your internal processes, ask a fraudster. They know how it all works. And so how do you start to leverage AI internally to sort of consolidate that yourself? And so, one of the key ones for us, we see it in mortgage, we see it in auto mostly, around documents. So just creating fake documents. You can go on site. I never knew this. There's template farms. So if I want to get an employee verification from Imperial Oil, I can go online and I can find it, and they're going to give it to me. It's going to look like it. And so how do you detect that? Because it will look okay, but maybe they didn't change the postal code. So AI can start to really drive some of that and get some of that friction out. One of the things that we will have to do as an industry, though, is many of our analytics company or our analytics teams come from a very specific place. We had a bunch of experience that creates goods and bads. I put it into a model and then I predict it. So the reality is that means you've waited for it to happen and then I predict. That is not what the fraudster's doing. And by the time you've detected that, they're long gone. They're on their third scam. You're still figuring out their first scam. And so even our modeling sort of methodologies have to flip to be that kind of proactive. Think like the fraudster, find the new vulnerability, the new vector that they're going to come after. Because we are starting to see just a lot of little things where they're able to come through. And so I think from our side, on the preventive over the next couple of years, to me, the focus for AI will be how do you streamline some of the friction? Because I'm with Daniel. There's got to be something in there. Part of our challenge, and it actually creates gaps for them, is a lot of what we're doing is point solutions. And Daniel described it perfectly. A lot of what we're hearing is everyone's IT resources are all putting in new things because the regulators asked for it or this has happened. And so how do you streamline that? How do you orchestrate that so it's not a point thing? It's a bunch of signals that come together. So we're seeing loan stacking, synthetic ID. But if every one of those is a separate step, that's really clumsy from a consumer perspective. And actually it's probably good for a fraudster to find your gaps. And so AI is really going to have to bring that together as a suite. And like I said, come much more from their side of let's find the next vulnerability versus let's model what's been happening, which is very different from many of our analytics teams, including my own. And so how do we change that? How do we act quicker? We all got model risk management and all those things that could take 6 to 9 to 12 months to put in a model. You've missed. And so how do I make that very quick? And so AI can really help us validate and do things much quicker, deploy things directly to production faster. So I don't think it's as big fancy models that we need to worry about. We shouldn't worry about the math part of it, but it's what's the business problem, and that's really where we see it emerging, is starting to think the way they do to be proactive in front of it, and just making it much easier to consolidate into one sort of point that makes the friction feel a little bit less from a consumer.